What's up guys, Tyler here. Are you thinking about getting an FHA loan? Or maybe you're already in the process. Either way, in this video, I'm gonna prove to you why you should not get an FHA loan. This is not clickbait. This is not just another pros and cons list that I made to throw up on the internet for you to watch. This is real stuff, really affecting my clients in a tremendous way, to the point where many of the new buyers that I'm working with have already lost 2 to 3 times before I even started working with them. So if you're wanting to get a home this year and not turn up empty-handed over and over again, make sure you hit that like button. Because sellers like that kind of thing and it's gonna help out. Let's get into the video. Now, for those of you that don't know, I am a realtor and I've been a realtor for over 10 years. And I've been wanting to talk with you guys about what the heck is happening in this market. What I'm gonna share with you is what I've been sharing with every single one of my clients in one way or another. Buyers with FHA loans are getting absolutely destroyed in this market, and I wanna address and answer a few things. Number one, what is happening in the market that is causing FHA buyers to lose in a big way? Number two, what is the biggest difference between the FHA loans and those other loans that are getting accepted? And 3, what can you do to prevent this rejection and make sure you win a bid in the future? By answering these questions, you'll be mentally prepared and hopefully ready to do what you have to do if you decide to buy a home in this market. So let's start at the beginning. When a buyer meets with a lender to see if they qualify, the lender will look at their credit, their income, work history, and much more to determine what type of financing they may qualify for, because not all loan programs are the same. In a balanced market, there is about a 6-month inventory of homes. Normally, sellers would consider any buyer that puts an offer on a house, and now that is still the same today, but things are just different. Homes normally would be on the market for 30 to 60 days, and you would maybe have 1 or 2 offers that would come in for the seller to review, leaving very few options for the seller to consider, requiring them to work with the offer that they actually have in their hand. In this seller's market, and in many parts of the country, inventory is just 1 month, 30 days. This means that if no new homes come on the market, the current homes for sale would all be sold in 30 days. A normal balanced market would take about 180 days. How long homes sit on the market determines the type of market that we're in. So it's clear that we can say that we are in a seller's market because of the lack of homes that we have available. Sellers are not just getting 1 or 2 offers. They're getting 5 to 10 or even more offers, and now instead of a seller having to work with just 1 or 2 offers, the seller has several options to choose from. They start looking for which offer has the highest price, which one has no inspections, who is not asking for closing costs, who's willing to remove the appraisal contingency, how financially qualified is the buyer, and what type of financing do they have. I found that sellers are given priority to cash offers first, then conventional loans, and then lastly, FHA and VA loans. So if there are 10 other offers on the table, there's a high probability that 1 or more of them are going to be conventional loans, which is considered a better type of financing. So honestly, why are sellers choosing conventional loans over FHA loans? Well, when it's all said and done, it comes down to just 2 factors. Number 1, conventional buyers are just more qualified buyers, simply because the requirements to get a conventional loan are tougher than getting an FHA loan. Now, I did this video right here where I compare between the differences between an FHA and a conventional loan. Then I also did a more in-depth video on each of these that you can check out in the description box below this video. Now, second, FHA loans require an additional inspection. An inspection where in most cases buyers are voluntarily removing the general whole house inspection and purchasing homes in as-is condition. So let me put you in the shoes of a seller for a second. Let's just say your first offer is a conventional loan offering $250,000 waiving the inspections. And then you have an FHA loan that is also $250,000 and they waive their inspections, but they still have the required inspections that they have to do. So which would you pick? A conventional loan, because there's no inspections, right? Well, let's change something here. Let's say we still have a conventional loan offering $250,000 and they're still waiving the inspection. And then your other offer has an FHA loan, but they're offering $255,000. Would you as a seller take the extra $5,000 over a conventional loan? Well, you might have said yes, but if I was your realtor, I would have told you to go back to the conventional loan and tell them that if they're willing to raise their price to $255,000, then the house would be theirs. Why? Because I can. I want a better qualified buyer. I want no inspections. And if a conventional buyer is willing to give that to me and my seller, then guess what? Everybody's happy. They get the house and my seller gets more money in the end. Now, in these two examples, I'm just using two offers in this case. But in many cases, there's several offers that are on the table. So how in the world are you going to have a chance in a market like this? Well, first off, if you have the ability to go conventional, I would highly, absolutely recommend you do this to increase your odds of getting your offer accepted. If you can't, I honestly would prepare myself not to get too emotionally attached to a house because honestly, the odds are going to be against you. But still, here are a few other things for you to consider whether you're using an FHA loan or not. I would consider removing your appraisal contingency. This means that if you put a deal together at $250,000, but the appraisal comes back at $245,000, you would be required to cover the difference of the appraisal value and the purchase price, in this case $5,000. Now, if you're not into removing the appraisal contingency, then you may have to make some compromises into the type, style, or location of the home that you may be looking for. You may have to consider purchasing a less desirable home. Maybe a home that needs some TLC or a home that is in a less desirable area. Also, you might offer to cover any required repairs that come up from the required FHA inspection. With a little persuasion, you may be able to convince a listing agent that your offer is more desirable if you do some of the things that I'm suggesting here. If you are interested in ways to structure your offer, check out this video here where I share 6 tips on making your offer irresistible. And lastly, I can't predict the future. It may slow down, it may not. Do not try to time the market. Do what you believe is best for your family and go in 100% towards that goal. I made this video here where I help you avoid the 3 biggest mistakes I see buyers make all the time. And that's pretty much it, guys. Thanks for watching. I appreciate you all. Love you. We'll see you in the next video.